Hello fellow investors, I will be dedicating the next videos to restaurant stocks, but I don't think I'd be covering all 50 of them. So if you have specific restaurant stocks you want me to review, just hit the comment section below. I've screened MCD last video and now I'm doing SBUX. I've screened this before at $89.6 and I told you not to buy the stock because it's overvalued. If you watched that video and you got convinced to not buy the stock yet, I saved you $14 per share at current price of $75.6. And I saved you $21.21 per share at the dip of $68.39 on May 12. They reported earnings on May 3 after hours. Revenues exceeded both base and analysts' expectations. But the margins were terrible. The stock went up anyway, then it sold off. What price should we buy SBUX for this quarter? SBUX is currently trading at $75.6 with highest price of $126.32. That's 40% of the highs. Market cap is 86.71 billion and PE ratio of 20.24. They give out an annual dividend of $1.96 per share, a yield of 2.59% of the current price. EPS is increasing, OSN is decreasing, 2 checks. SBUX bought back 285 million shares in 5 years. This is SBUX financials and their margins. As you can see here, this is almost half of MCD's. Although their revenues are higher than MCD's, their margins are not the same. That's why MCD is valued more than SBUX. SBUX is treated like a growth stock. Look at their revenue growth. I used 11.38 here to divide the current PE of 20.24. 1.7 is the multiple or premium we're paying if we buy SBUX at these current prices. The margin of safety for SBUX, I use 30%. So I could be buying the stock at PEs of 10, 12, and 14. Price to free cash flow is high at 24.03. My threshold is 20. Even if it says 0.84 here, a discount, I'm not buying the stock based on this metric. If you're buying SBUX for the dividends, it is safe at 52% payout ratio. Historical data suggests that it's trading at a lower PE now. But look at the PEs before. SBUX had been trading twice their margins, even before. Here are some metrics and ratio I look out for. No PB ratio, meaning the investors will receive nothing when the company gets liquidated. Current ratio is low at 0.83. Their liabilities for the quarter is higher than their assets. Take note of their debt level. This is only the long-term debt. The long-term capital lease is not included here. Although their debt levels are considerable. Here is SBUX summary of valuation. It's still overvalued, still treated like a growth stock with high multiples. Remember, the markets don't like growth stocks right now. It's trading almost twice their margins at 1.78. I don't own the stock. I think paying premium for the stock is reasonable. I'd sell this if I were you. Don't short it though, never short. I'm not buying SBUX at this current prices. I have fair value of $42. Intrinsic value of $29. This is from Guru Focus. My highest entry price could be $52. Here are my multiples for growth and prices. 10%, 1.25, 1.5, 20%, and 30%, 1.75. At current price of 75.6, Starbucks is trading at around 12 PE with 1.75 multiple. It's priced in a growth of 1.75 times EPS, assuming their margins will stay the same. Looking at charts, $42 is fair value, $52 is my high entry price, $65 is 3% dividend yield. $49 is 4% dividend yield. I think I'd be buying Starbucks at around $50. My high price and a dividend of 4% dividend yield. I still don't recommend buying SBUX at these prices. I think Starbucks should trade sideways till their fundamentals get better by increasing their margins and increasing EPS.